You're listening to the Moneyweb Now podcast series with Simon Brown. Live streamed every weekday at 6:30 a.m.
It's Friday, 31 July. Bank of Japan kept rates unchanged, but only after invading into the local equity market and defending the yen. I'm Simon Brown, coming at you live and loud from the Moneyweb Global Headquarters in Johannesburg, South Africa. On the show today, Josh Flynn, you find him at Merchant West Investments. Mondi results. I mean, really tough set of numbers, but the market liked it. But perhaps that's just because the stock is so sold off. We'll get his view, and then a quick thought on the Woolies update. A tough H2 and a tougher Q4. Ilana Nell from 91. Foreign trust, is it right for your estate plan? But also, what are key considerations? And thoughts from me, the problem with deflation for retailers and ultimately consumers. Do we get those price cuts? This podcast is brought to you by Stanlib Asset Management. Invest in more global opportunities through their partnership with JP Morgan Asset Management. Morning headlines: Moneyweb Soho Sun to offload Volcom Casino after slashing value by half. This is the first of the majors to start with a disposal following immense pressure from online betting. Business Day, SA population hits 63.52 million as population rate treads water. Gauteng leads provincial growth as migration shapes demographic shifts. Morning markets: US green, S&P up 1 2/3%, Nasdaq up 3.4%. The East is mixed. We've got Sydney almost 1% lower, Tokyo up almost 4.5%, Hong Kong down 1/3%, and Tencent up just over 0.5%. Commodities mostly green. Gold futures 4,133. Brent is the red at 88 exactly. Platinum green 1,645. Palladium also green at 1,301. The rand is 16.51. Bitcoin 64,300. Top 40 opening call. Green open 520 points, 0.5% higher.
Moneyweb Now on the money. Also available on podcast.
Chatting now with Josh Flynn, he's equity analyst at Merchant West Investments. Josh, appreciate the early morning time. The Mondi numbers, I've been watching the stock for much of the year. It's just been falling and falling and falling, and it keeps on coming up on various different filters that I run because, you know, dividend yields are looking great and PEs are looking great. But of course, that was all historic. We saw revenue up 2%. We saw HEPS down 85%, dividend off 60%, albeit not bad cash generation. Your thoughts and the market response, which was, pushed it up into low double digits. Monday numbers, was it a case of not as bad as expected?
Good morning, Simon. Thank you for having me on. I think you're exactly right. On the surface of it, it looked like quite an ugly set of numbers. Revenue only up 2%, as you mentioned. The normalized earnings down more than 70%. And obviously that dividend being slashed about 60%. So I think this is a classic case of the capital cycle in play. The market is obviously forward-looking and taking a view that this is potentially trough earnings. And with a cyclical stock like Mondi, often the best time to buy a share like this is actually when the PE, the trailing PE ratio screams quite expensive. You add a cyclically low earnings base. So I think that's obviously what the market's read-through was. And that's why we saw the counter up about 12% yesterday at the close. So I think the market obviously liked management's kind of view on the CapEx spend. They are tightening the taps there, scaling CapEx back about 50 million euros, as well as maintenance spend about 20 million euros. So I think that's what the market was looking at, is kind of reading through the cycle and saying, okay, we think this is trough earnings and things will look a bit better going forward.
I take your point, and that was very much my sense of what management was saying and were indicating with the results, that yes, it's been a horror, but we have done what we can, we have fixed where we can, and that the worst is very much behind us. And management seemed quite adamant around it, and the market agreed, which I think is the important point. We got some agreement between management and market.
Yeah, I think that's exactly the case. I think for me, what I'll be kind of looking at going forward, I still want to see a bit of more supply being kind of taken out the market before we kind of see that upcycle in kind of demand exceeding supply. We've already seen about 10% of the US container board supply being taken out the market, and obviously Mondi now kind of indicating they're slowing down their capex. They're kind of out of this expansionary phase and going into more of an operational efficiency stage. So I still think we may be a bit early into the market, but it's definitely trending in the right direction from a capital cycle perspective, with supply being kind of rationalized and taken out in a softer demand environment.
But you make a great point. This is not just a Mondi problem. This is a broader paper packaging challenge that has been, and this is a 20-year story, and we can look at Sappi, and there are stark differences between the two. But this is not just a Mondi story.
Yeah, 100%, Simon. This is definitely an industry-wide issue when you have kind of excess supply going into a soft demand environment. This often tends to play out where there's a lot of fixed costs involved, especially for a company like Mondi that's quite vertically integrated. I mean, they own their own forests, they'll then own the mill. So there's a lot of fixed costs involved, and it's hard to kind of scale back that spend in a soft demand environment.
Yeah, it is a giant base, as you say, in terms of the costs there. Let's shift to Woolies. This was a trading update, not results. They spoke around weaker H2. We saw that with Boxer earlier in the week. They talk around an even weaker Q4. So in other words, a deteriorating experience. Typically, Woolies is the food story good, the fashion, health and beauty so, and Australia disappointing. Australia actually made a profit. But your thought on the numbers out of Woolies and the risk, because of course, tough consumer environment, we shop down, and Woolies is perhaps at the top end of the pyramid.
Yeah, I think exactly what you said, Simon. This is kind of a result we've come to expect from Woolies, where the food business continues to deliver quite strongly, and fashion, beauty, and home continues to be a drag. I think in this case, particularly fashion. Home and beauty look relatively strong. I think home was up about 11.7% sales growth. Beauty did about 7.9%. So fashion really has been the drag there. And we know the SA fashion retail landscape has been fiercely competitive. If we look at the share prices of the likes of Truworths and TFG and Mr. Price, we know it's been a tough space. And Woolies sits in a very awkward space. They're catering to that middle income consumer. And when you're getting rate hikes and high fuel prices, that middle income consumer is quite under pressure. And we can see that now with Woolies fashion, beauty and home results, especially in that second quarter or second half of the year and that final quarter where the Middle East conflict really was quite elevated. And we saw a rate hike in May, and we then saw kind of elevated fuel prices. So I think that is the case with Woolies. They're in a difficult position. On the higher end, they're being attacked from the likes of Zara and H&M. And on the lower end, they're being attacked upwards from the likes of Mr. Price and Pepkor. So it really is a challenging space in that fashion segment when you are catering to a stretched SA middle-income consumer.
Yeah, 100%. And to your point, you go and fill up your car with petrol, diesel. It costs an extra 600, 700, 800 rand for a tank, and that's money that did not go to fashion, health and beauty. We can see it absolutely. We leave it there. Josh Sloan, equity analyst, Merchant West Investments. Appreciate the early morning time. Give you money smoother returns for Stanlib Asset Management. The Stanlib Flexible Income Fund's agile investment process preserves and grows capital in all markets.
Moneyweb now on the money.
I'm chatting with Ilana Nell, fiduciary specialist at 91. Ilana, I appreciate the time. Talking foreign trusts, and I stress the foreign part here. I suppose before we delve into some details, the thinking behind a foreign trust really is around tax planning and ultimately estate planning.
Simon, that is correct. I think often there's a misconception that it's all about tax. And really, it's obviously important and it should be considered and the client should understand it. But it should also be about more than that. It should really be about estate planning and looking after the next generation and setting up a structure that's got a really long-term benefit for the whole family.
I get your point. Now, I want to delve into that long-term and the family part of it. But before I do, a lot of folks think, foreign trusts, if you're a billionaire, absolutely. But these days, the ease of my having offshore assets has become so much easier that I suspect that this is not just for the ultra-high net worth individuals. This is a serious consideration for people who are investing overseas, which most of us will be doing, increasing their values.
Yes, I agree. I think the fact that so many people are investing offshore in any event, as you say, and that your mechanisms to be able to do that have become so much, easier and the values have increased so much. It's really opened up foreign trust to more people, but I think we still need to accept that there is a certain quantum that we need to have to make it worth your while. A foreign trust can be an expensive vehicle. There's setup costs, there's trustee fees, there's trust administration fees, and, it needs to be worth your while in the end of the day.
Absolutely. The fees are an important point. Is there, you say a quantum, is there a magic number? Is it, if you've got, I don't know, is it $1 million offshore or 10 million? Is there a number at which it's a case of, get phoning quick?
Not necessarily a fixed number. I think there's a few things which plays a role. So, how you're going to fund the trust will determine whether you, for example, if you're funding it via a loan from South Africa, you need to charge interest on that loan and you're going to be paying tax on the interest that you earn. So that's let's call it an indirect further cost, which means you need a little bit more funds to make it worth your while. But if there's going to be an inheritance, maybe, from a non-resident or a family member, or you may know about the ability for South African trusts to make distributions now to foreign trusts. If you're funding it that way and you don't have that loan cost associated, then immediately the value can be a little bit lower.
Yeah.
And I think the other consideration is, is it a once-off lump sum? You've sold your business and this is the amount that you have? Or are you able to add to it over time? So yes, you may start at a $1 million level now, but over time you're going to be adding to it. That will also make a lot of sense.
And talking there, because of course how we fund the trust matters. We can do donations, but donations are capped at, in South African tax law, 150,000 per person per year. A lot of it is going to be via that loan structure, I imagine.
Yes. So remember, you can donate a lot more than the 150, but then you're paying donations tax at the very high levels. So it's been very common for South Africans to have to fund the trust via a loan. And as I've said, the newest method is if you have funds that's been building up in your local South African trust and certain requirements are met, then you could potentially make a distribution from the South African trust to the foreign trust.
Oh, gotcha.
As well.
Yeah, hadn't thought of that. Of course. You mentioned generational right up front. And as I said, a trust, yes, there's tax issues, there's estate planning. That estate planning then perfectly sort of blends into the generational issue here. And that, I suspect, it might be a secondary plan up front, but I think the generational becomes a lot more important as time moves on for many of these trusts.
Yes, definitely. To have the ability that your beneficiary can receive distribution from a foreign trust to take care of their education one day, even overseas education, or to set them up, in a property, to set them up by buying a business. It's really, not just children, you're thinking grandchildren and the generations after that. And, even where your loan funding or your funding is via a loan, there's also then decisions that you need to make in terms of your will, how you would deal with that loan asset, which you will own at the time of your death. And if the loan is bequeathed to the trustees of that trust, that will mean that there's significant or could be significant capital in that trust, which is also very beneficial when it gets distributed to the South African beneficiaries in future.
Gotcha. And does a trust protect the assets against sort of things that are going to happen to us? I'm thinking perhaps insolvency, perhaps creditors, perhaps just bad spending habits. To be clear, some of us are people and human nature. The trust kind of protects generationally against that as well.
Absolutely. So if you think, what's the alternative? The alternative is I bequeath my assets to my children, who bequeath those assets to their children one day, and they all own it personally. And, there could be claims against those funds, or they could spend it during their lifetime. Whereas if it's in a foreign trust managed by professional foreign trustees who need to utilize those funds and look after it for the benefit of the beneficiaries, it is much better controlled in terms of protecting the beneficiary against all of those life risks, to call it that.
Life risk. I like that as a phrase. A practical question, which I think is going to open a bit of in terms of distributions. Ultimately, we want to take some money out of the trust, not in terms of collapsing it, but, we take money out. This is the purpose of the trust. How is those distributions? How are they taxed for the individual?
So for the South African tax resident beneficiary, it will depend on what is the nature or the source of that distribution. So if it's from actual capital, so for example, there was an inheritance that went into the trust or a capital distribution, that can always come out as capital distributions, which does not have any tax implication for the beneficiary. But if, for example, the whole trust was funded by a loan from South Africa, then you can repay that loan, obviously also tax-free, but anything else, so be that accumulated income or accumulated capital gains or current year income or current year capital gains, if that gets distributed, it retains its nature for the beneficiary. So if it's a capital gain, the beneficiary will be taxed in South Africa at the maximum or up to the maximum of 18%. Or if it's a rental income from an overseas property, that will be at marginal tax rate. And if it's a foreign dividend that gets distributed, it will be at the reduced 20% rate.
Gotcha. Okay. Perhaps not as complicated as I thought. A last question. We've touched on costs, but perhaps and many of the importances. One of the big points I think folks do have to understand is that you really are giving up control of those assets. And, in many cases, particularly if it's investments and the like, you've probably got investment managers. But that is an important consideration that someone needs to take into account.
Absolutely. I think it's vital that people understand that once you've given the funds, be that via distribution or inheritance or loan to the trust, it now belongs to the trustees to look after it for the benefit of the beneficiaries. And you no longer can give any instructions or make any demands. So where you utilize loan funding, you obviously still retain that loan asset and you can recall your loan or ask for repayment according to the terms of your loan agreement, which will be in place. But apart from that, you absolutely need to realize that you've given control away. And, that is sometimes, a big thing for clients to consider and get their heads around.
Yeah. And for many, I'm sure it's like it actually just makes their life easier. But for some, I think that might be a hard step. We'll leave it there. That's Alana Nell, fiduciary specialist, 91. Appreciate the time. And that's our poll today on LinkedIn. Do you have a foreign trust? Are you considering one? Trusts have been weird. So back in the 80s, everyone wanted a trust. Into the 90s. And then SARS started clamping down and they kind of went out of favor. But they seem to be back again. And you've got to have some good net wealth here, notwithstanding. But maybe you're considering one. Maybe you already have one. Have your vote. Have your say. LinkedIn. Let your money weather the storms with Stanlib Asset Management. Invest in the Stanlib Global Select Fund, a diversified all-weather equity portfolio submanaged by JP Morgan Asset Management.
Moneyweb now on the money.
Thoughts for me and the problem when we see deflation for retailers and ultimately consumers. So Boxer reported it earlier in the week and they talk around, we are seeing deflation. Goods are going down. But that's at the sort of the way into the Boxer store. Do we see it on the way out? Because there are challenges, right? So the price goes down, but the price of the bag of carrots is going down as it comes in. But everything else is going higher. The rent is up, the staffing is up, the electricity is up, and et cetera, et cetera. Cost of marketing, all of those are moving higher. So if they take that hit on prices, margins are getting squeezed and their profitability takes some pain. Now, I've chatted with Peter Engelbrecht about this before. He, of course, CEO at ShopRite, and he's like, yeah, absolutely, there are ways we can try and manage it. But broadly, when we think about it, we always like, prices go up, they never really seem to come down. And in truth, that kind of is right. And even if they do come down, we're not going to get the full benefit of it coming down because it's unlikely that the other core components, rent, staff, electricity, etc., are coming down. So it really is a case. Stuff goes up, but it doesn't often come down, and it never seems to come down as much as perhaps it should. That's it for today. I was chatting with Dylan Bradfield yesterday. He, of course, from ShareNet. We were talking the FOMC decision to keep rates unchanged and their promise to keep inflation under control. And the question we asked you, can the Fed and its new chair tame this US inflation, which has, to be clear, been outside of their 2% target for well over 5 years? Half of you said nope, not anytime soon. The rest was split between they'll get there eventually and the rest saying sure, they will get there quick enough. Have your vote, have your say, LinkedIn. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. We're live every weekday morning, the Moneyweb website and the app, 6:30 a.m., podcast just after 7. Thanks to my team, Eddie, Nobokle, Nicole, Sabu, to you for listening, my guests for their time. My name is Simon Brown. This is Moneyweb Now. We'll chat again Monday. Shifts in the shrinking construction industry.
You've been listening to another Moneyweb Now podcast, posted every weekday at 7 a.m. on moneyweb.co.za. Moneyweb Now, on the money.